Then maybe let's move on to CMU. Sébastien, you also mentioned Capital Markets Union is one of a key priority for the European economy, for the banking system, but it has been already a priority for some time right now. But what I would like to know is what is in the new CMU action plan, let's say, how would it contribute to the recovery of the EU economy, and what is the impact that you will see this may have on the EU banking system?
You cannot rely probably only on a EU level top-down approach, because you don't create capital markets, you don't increase in a structural way its deepness, liquidity through regulation. That might help to avoid unnecessary burdens while keeping, of course, financial stability and investor protection at the heart of the legislation. But you cannot expect to create that from legislation only. Here, the departure of the UK is, of course, a very important event, since the UK was, in some segments, quite the only player in the European Union. So we need to develop a lot of things, not for the pleasure of developing capital markets, but for being able to finance future EU needs. For this, you need political support.
One of the big topics in the whole banking industry at the moment is obviously this whole area around digital transformation and then green transition. Yeah, and what I would be interested in, how do you see these two global trends are affecting the business models of the savings and the retail banks? Yeah, and what are the forces reshaping the industry as we know it right now in terms of competition and its contribution to the EU economy? And then, if I may also include one point that was included into this question by Daniel Gluch as a question in the Q&A tool: how do European banks stand versus US banks in terms of level playing field, in particular when it comes to the green transition part?
On the one hand, in order to remain cost efficient, banks have to optimize their branch network, and this means that some branches are being closed when other distribution relation channels can replace them in a proper way. However, as savings and retail banks, we are committed at maintaining the capillary coverage of our branch network, which characterizes our regional identity. On the other hand, we need to increase our reach via our digital channels. However, these digital channels are not always best positioned for the provision of more complex products such as mortgages, and here the loss of physical contact with our customers is simply not an option. This loss would reduce our capabilities to advise and to suggest products that are tailored to our customers' need. Furthermore, whilst in the past the customer would visit a bank branch once per week or a couple of times per month, modern customers log into their bank apps almost once per day to check their balances and to perform transactions. Our challenge is to convert these more frequent interactions into business opportunities. And this also brings opportunities to preserve our responsible role in the digital society. Let's take, for example, the increasing popularity of the so-called buy now, pay later products. Claiming to be payment products, the business models of these providers are built on the concept of making consumers buy things they don't need with money they don't have. These providers are actually providing consumer credit in disguise and have possible over-indebtedness as a result. In short, I believe savings and retail banks are best positioned to remain the trustworthy advisors to our customers for their financial planning, especially in the digital age. Something that we welcome less, as you can imagine, is the fact that the Commission proposed to the so-called single stack approach for the output floor, which would mean applying the floor to to EU-specific components of the capital requirements on top of internationally agreed ones, instead of using the output floor as a backstop by applying it to internationally agreed capital requirements only. Yeah? This is simply unfair for European banks.